What is going on, everyone? This is Jordan with Conquer Trading and Investing. It's the weekend, which means we have a fantastic episode ahead of us. We actually have the time to not only look at the charts, to find out what is going on and to plan our moves for Monday and the week ahead. We get to look at some really interesting charts and news that is occurring, deeper into the macro and getting a feel for exactly what is going on in the markets. This is going to be a really nice episode. I'm looking forward to sharing it with you. We're going to start here right now on the daily time frame, and what I want you to see is the last two price bars. This is Thursday and Friday. Notice we are down on the week here. Let me make it easier for you, show you the weekly candle. Not such a good looking candle, right? It closed about halfway between the upside and the downside. This is also indicative of the battle going on right now for this level that we're at right now between the bears and the bulls. But however, it did close down on the week. Now, I want you to see these last two price bars on Thursday and Friday. Why they did stop us falling from this trend line over here, at which point a break of that trend line sets up two things. First of all, we can say that we have a head and shoulders, right? You could see over here the left shoulder, the right shoulder, the head and the right shoulder. A break of this neckline will bring us right actually down towards a target of 26.28, which is also happens to be where we have some pretty strong support. Now, you could see over here as you have this big sell-off over here, the last two price bars were only just up a little. That's a type of pattern I see happen in the markets often, and normally if the third bar takes out the low of the second up price bar, which only retraced a little bit, it's a big continuation move to the downside. Beware of that on Monday. Now, I have to say we have to look at what is exactly happening, and then we're going to get down to the low time frames where we're really going to give ourselves a look at what is happening next. But you have to say that as the bears try to break this trend line over here, or this neckline coming in right around, it was around 28.22, immediately strong buying came in, took it up, prevented the break, and then again, the same thing on Friday, we're able to hold it up. We closed just a hair above the resistance over at 28.58, making that into support now at 28.58. Where does that lead us? We're going to be taking a look at that today. We're going to be taking a look at what is next, what is our plan. Before we do that, we're going to get into some interesting macro. I've talked about how cracks are forming. I want to get into that right now. We're going to just take a look here at some really interesting data, and it's going to really help form our opinion of what's going on. Now, this is a chart over here looking at the momentum is a beast, right? And you're talking about the top 5 tech stocks, and they are outperforming the rest of the S&P by 31%. Now, the top 5 tech stocks also make up 21% of the S&P. So if you're wondering why the S&P is up in this type of environment, it really comes down to 20% of the index, or 5 tech stocks. All right, interesting. Look what's lagging down here. Now, let's dig deeper into that. The big 5, right? You have Facebook, Apple, Amazon, Alphabet, Microsoft. You could see that they make up 40% of the triple Q and 20% of the S&P, of the SPY. Now, look at this down over here. Look at what's lagging. 600 small cap. Look at this. Look at the difference. Down 33%. What's going to happen? What's going to lead on the way down as we turn over? And we're going to turn over. Who's going to be leading to the downside, right? Do you want to focus actually on the big 5, or do you want to focus on the 600 small cap? What about the Russell 2000? Down 22%. Interesting, right? Now, we're talking about the big 5, and what's going to stop that momentum? What is going to stop that momentum? When is the tech going to catch up? And are they tech, right? Apple's a tech stock, that's for sure. But what about What about Alphabet? Is that a tech stock? What about Facebook? Is that a tech stock? I'm not sure, right? Let's see what's happening over here. U.S. Attorney General likely to bring antitrust lawsuits against Google. This is news, late breaking, just yesterday, 14 hours ago. Dun, 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 dun. What, is that going to be weighing on the markets on the open on Monday? Are we going to get a gap down? All right, so let me dig in a little deeper for you. This is the percentage of S&P stocks above their 200-day moving average. Here's the S&P. Here's the amount of stocks above their 200. That's less than 25% of the index as a whole. Is that strength or is that weakness? Right? Now, let's dig deeper. This is financial stocks only make up 10% of the S&P 500 today. They only make up 10%, but nevertheless, it's 10%. Which way are financials headed, right? As we're possibly headed towards negative interest rates, what's going to happen to financials? Do you see a rebound in financials anytime soon? Already down 60% year to date. That trajectory looks like it's going to continue. Warren Buffett sees it the same way. He's reduced his holdings of JP Morgan and Goldman Sachs drastically. Warren, selling America, sitting on a bunch of cash. What about the energy sector? The energy sector now only makes up less than 5% of the S&P. But look at this, right? Look at this just. Do you think that's going to turn around anytime soon? What about this? This is what the smart money is saying, right? We've heard from David Tepper this past week. He said this is the second most overvalued stock market ever. What did he mean by that? Was that just a headline? What was he talking about? Look what he was talking about. You have to go back to the dot-com bubble to see forward PE ratios to where they are today. The second most overvalued he's ever seen in his career. Buffett hasn't made any big investments. Like we said, he's sitting on $120 billion cash. Stanley Druckenmiller, the risk reward in stocks is the worst he's ever seen. So when I talk about cracks forming, these are the cracks forming. It's a very fragile state we're in, right? Now, we have to be aware of the fundamentals. You cannot have the mentality that, you know what? It's worked out in the past that, anytime there's a dip, I could just go ahead and step in and buy the dip. Yeah, that's worked out most of the time, most of our lifetimes. But it hasn't always worked out. Go back to 1929. There are those that believe that the Fed has their back. The Fed put. That no matter what happens, the Fed is going to step in and do whatever they can to prop up the markets. And you know what? They're right. The Fed is going to step in and the Fed is going to do whatever they can to prop up the markets. We all know the Fed already stepped in right now and started buying credit ETFs. They're going to be buying equities next. That's their last bullet. That's the last thing that the Fed could really do. When are they going to do that? Well, as soon as we come back and start testing the March lows and or take them out, rest assured, you're going to start seeing that direct intervention, manipulation, whatever the case, whatever you want to call it, it's going to be happening. But what happens when people lose trust in the Fed? Do you not think that's going to happen? Do you not see that already trust? The whole financial system is built on a house of cards and it is very fragile. Once people lose trust, it's hard, you cannot earn that back. So listen, all that are just some random rambling thoughts. What is important is what's happening before us, okay? That is what is the most important. We've looked at the price action of the last 2 days and why the bulls definitely put in a nice little stand here protecting this technical breakdown of this trend line, which would lead obviously down. A breakdown is going to lead down towards the 26-28 level. First target area, 26-28. That's a nice move. I want to watch what happens this coming week to see if I can get involved. Right now, obviously on Friday, those who are here for the live stream know that our plan going into the day protected everyone. Absolutely protected everyone on Friday. What about now? All right, listen. Right now, although we regained this support here at 28.58, things are pretty fragile. I just showed you what the daily time frame looked like, and we've had 2 retracement bars that were, let's go back and look at it. I want you to be able to see and understand. We've had this sell off of resistance coming down pretty hard, coming down to the neckline. These last two bars, Thursday and Friday, right? They are small retracement bars. This is usually an extension of a downtrend. If we take out the low of Friday, come Monday, probably we're going to start seeing significant selling. I want you to be aware of that. Now, don't jump in just thinking that's going to happen and you could get in early. Not at all. We've regained the 28.58 support level. It's been flipped back to support. Things are over here. I would say that there's a battle going on. I would say that the Bears still have control, but the Bulls have put up a fight. Again, watch what happens on Monday. Good chance we see a lot of pressure on tech. There's a good chance we see a lot of pressure on tech. That's 20% of the index. Therefore, and watch 40%, right, of the triple Qs. Watch what's going to happen to the Nasdaq. All right, now what I want you to watch is the upside over here at this level at 28.89. If for any reason we're able to regain that this coming week, right, I want to have a plan for both sides of the market. I want to have a plan for both sides. If we're able to regain that level, that's not even pretty bullish. That's about as bullish as we can get. And there's no question I'm going to be looking at what happens as we take a poke at 29.72. I'm going to be looking to establish a long position above 28.89, and I'm going to look to see not only if we could come in and test, but what happens above there. Do I think that is going to happen? Absolutely not. I don't think that's going to happen, but I'm ready for it in case it does. I have no qualms about trading either side of the market. I just showed you. You all know over the past week, I've been talking about the cracks developing. I see them now. I see them pretty strongly. It doesn't mean that just because I see the cracks that I'm looking to go ahead and shorten this thing at all. What I'm waiting for is some technical levels here. And that technical level remains two things. It remains the lower trend line over here, the lower one, the brighter one on the chart, that's coming in somewhere around 28.32 on Monday. And then right below that, we have the support at 28.09. Those two levels we get below there, and then we're really going to start looking for some downside movement. Now, what was the low of Friday? What was the low of Friday? Because we talked about if we get below that, watch out. That comes in at 28.14. Now, don't forget you still have the support directly below that at 28.09. Watch out for those two levels, okay? Get below there. And again, we're looking to really get that selling momentum going. That's where we want to be involved. Do I see an entry before then, before the break of the trend line? No, I do not. I'm going to wait, right? This whole area, it's been a hard fought battle. I just want to exit out. Ready? All this area right here, we're just going to avoid. Now, a lot of you trying to force trades are getting into a lot of trouble. This whole area over here, no man's land, right? That's what we call it, no man's land, because no man belongs over there. Now, for those of you that don't like that, now we're back to no man's land. Yeah, that's why we stayed protected on Friday, because there was no business for a trade. A lot of people, hey, those of you trying to force trades on Friday, I know you got hurt. I know it. I don't want you to get hurt. I want you to stay safe and protected and wait for the right time to trade. This is what we're looking for. Above here, we're so bullish, it's ridiculous. We're going to see where it takes us. Below here, this is where we start setting up a trade. If we don't get it, we look for the breakdown of the support at 28.09. This is where we're looking for selling to resume. This is our plan going into next week. Listen, everyone. I really enjoy our time together all the time. I appreciate every single one of you. I love our live stream community. It's absolutely the best. If you haven't joined us yet, go ahead, jump in there, share with us. I look forward to Monday. I'll see you all then. Take care, everyone.